Nilesh Shah, MD of Kotak Mahindra AMC, joining in. Nilesh bhai, great to have you on. And just wondering if you're finding as much action in the EV space as we're seeing. Tesla, VinFast, Kia, all of this coming up. I'm going to start with a little broader question on India auto, and then of course we'll bring it down to stocks. How do you see all of this action?
So, as a fund manager, Tamanna, we have to differentiate between noise and news.
Yeah.
Technology is always exciting. In the initial stage, valuations are also high. But eventually what matters is addressable market. Today, undoubtedly, there are companies which are investing for future. And it is not just electric. There is hybrid, where Japanese automakers are taking the lead. There is hydrogen, which is not present in India, but globally, it's also one of the opportunity. Then obviously there is electric vehicle. And finally, there could be petrol and diesel also. As a fund manager, my job is to be fair to my clientele and make money rather than get committed to one idea or one technology. We'll continue to observe this auto space. In the near to medium term, I think it's better to keep options open. In particularly India's case, hybrid versus electric versus petrol, it remains still an open space.
Important points that you're making. Nilesh bhai, very good morning. Alex here. I want to ask you, because I know that you look at the bond market very closely and you look at the financials also, the financial pack very closely. So in the context of this CPI rate that we saw yesterday and the fact that it's at a multi-year low, there's an expectation that there could be another rate cut. Among all of the sectors that you're looking at, would you say that one of the biggest opportunities lies in that BFSI space, and particularly the lenders, which will see the benefit of those lower rates come through over the next few months?
Alex, whenever rates are cut, it is the borrowers which are going to benefit and not necessarily lenders. In the lender's case, the liability side gets repriced immediately. However, in the lender's case, the asset side gets repriced immediately as your loans are linked to repo rate or lending rates. But the asset side, the deposit, takes little time to reprice. So as interest rate starts coming down, it's likely to have in the near term negative impact on banks' margin. Of course, they can make gain on the treasury side. It is the borrowers who will benefit in a lower interest rate environment. In India's case, there is also one more interesting opportunity. The auto loan, housing loan, personal loan borrowed by individual Indians is almost $1.2 trillion. Interest rates are down 1%, another quarter to half percentage point if it comes. That will be savings on EMI. 1.5% on $1.2 trillion is a reasonably large number. Now, some part of this money will be saved, which could be good for financial services. But a large part of this is likely to be spent, which is going to be beneficial for consumer discretionary. So many a times we'll have to go beyond the headlines to find out where the opportunity is. And if you are ahead of the market in predicting the trend, you are likely to make more money.
Nilesh bhai, good morning. Neeraj here. Great talking to you. It's been a while. We were talking to the India strategy head of JP Morgan, Rajiv Batra, last week, who's probably a minority, but he mentioned that he believed that this quarter will set the stage for earnings recovery in the commentary, if not the actual delivery. And he believed that the markets will trade between 26,500 to 30,000 over the course of the next 6 to 9 months itself. Well, unusually bullish relative to all that I've heard. My question to you is, per se, are you constructive market? You may not be to that extent of 30,000, you may not be at 26,000. I'm not asking for levels. But are you constructive markets from where we are right now? And can earnings drive that recovery, Nilesh bhai?
So नीरज भाई, राजीव भाई के मुंह में घी और शक्कर. But undoubtedly, we are seeing a phase where for FY26, earnings growth is likely to be high single digit rather than low double digit. The base has expanded significantly over FY24 and FY25, and hence we expect consolidation of earnings. Now, could earnings surprise on the upside? Answer is possible. If we see coordinated action from regulator and government, it is pro-growth. RBI pumped liquidity all the way up to FY26. They have cut interest rates beyond expectation, and there is hope that there will be one more rate cut in the offing. They have reduced pressure, they have reduced or relaxed guidelines on infrastructure financing, releasing capital for the banks. The priority sector lending for small finance banks has been reduced. Gold financing rules and regulations have been relaxed. All this is pro-growth measure. The same thing is happening at SEBI's end. The R&D fund of 1 lakh crore, again executed well, could create growth opportunity through innovation. Put together, I believe there is pro-growth stance coming up in government and regulator policy. Monsoon has been good, macros have been stable, and there is a possibility of earnings upside. But as of today, we are waiting and watching the trend. We believe FY26 earnings growth for Nifty 50 is likely to be in high single digit. Mid caps will deliver double digit earnings growth.
Okay. Nilesh bhai, for those who are watching right now and are frankly getting bored of what's happening in the markets right now, daily traders, उनको बहुत boring लग रहा है. I'm speaking honestly. कुछ हो नहीं रहा है. Is this actually the time when long-term investors build wealth?
Undoubtedly, Tamanna. T20 के जमाने में टेस्ट मैच देखना बोरिंग है. But ask Neeraj bhai and Alex, wasn't yesterday a fantastic test match? Yeah. Despite India losing, didn't we all enjoy?
Yeah.
The fun.
आपने सही पकड़ा that I did not watch the test match.
that was a guess, Tamanna. Fortunately, it came correct. But boring is exciting. Investment is like gardening. You just water the plant, give the right soil and manure, and then watch them grow. Sometimes they grow faster, sometimes they grow slower, but long-term wealth creation does happen in a boring market. In an exciting market, in a momentum market, people end up committing lots of error.
So in this market where you have to sort of build your portfolio, what is looking interesting to Nilesh Shah? Where are you seeing that turnaround story? Could it be, for example, in the pharma space where a lot of decks are being cleared for large companies? For example, what we saw with Glen Pharma, what we could see with Wockhardt. Pharma companies from India coming into their own with true innovation.
So undoubtedly, pharma is more a bottom-up stock picking rather than top-down sector. One company can be lucky or, smart and lucky both. The other company may just be plain and simple unlucky. So pharma, you will have to pick it up as a bottom-up basis. And many times it's difficult to take a call whether a product will get approval or not, whether a product will get in-licensing or not. There are as many examples of failure on in-licensing and product innovation in market in India as well as globally. At this point of time, we are excited about two spaces. One is chemical. Indian companies had created capacities. They had capabilities. Unfortunately, China came in that competition heavily by cross-subsidizing their companies. That resulted into serious drop in margin for Indian companies. Now we are feeling that chemical prices are bottoming out. In some specialty cases, it has started recovering. Chinese competition has eased out. Indian companies under pressure for last 2 years have cut costs, become more competitive, expanded capacity through debottlenecking. overall Indian companies have capabilities, have capacities, and margins outlook has started improving. I think chemical sector over next 12 to 18 months could be an outperformer. The second space we like is consumer discretionary. Income tax rebate of about 1 lakh crore annually is coming to the taxpayers. EMI burden is down 1%, could come down by another quarter to 0.5%. That's another 150,000 crore to 2 lakh crore coming in the pockets of borrowers. There is potential petrol diesel price cut if crude remains at current level. And finally, there is 8th pay commission coming into play towards early 2027. Put together, all this spending, along with rumor of GST reduction, will leave money in the pockets of consumers. And they are unlikely to spend this money on roti kapda. They are more likely to spend this money on experiences like tourism, travel, airline, electronics, durable purchases, home improvements, and so on and so forth. So between two C's of chemical and consumer discretionary, we believe there is market outperformance.
So, in just taking that forward, Nilesh bhai, do you see an exciting prospect in your experiential space, tourism, your hotels, airlines, and that category as well as an extension of the consumer story?
Undoubtedly, my only recommendation to viewers will be, please spend money in India rather than outside. If you're going to spend money in Singapore, then benefit will go to that country, not to us. So we need to ensure that money is spent in India, but undoubtedly consumers and borrowers are likely to get more money in their pocket thanks to tax rebate, EMI burden coming down, 8th pay commission, potential GST rate reduction, and petrol diesel price cuts.
There is also this government salary uptake that is likely to come. That plus this tax cuts, etc. Does it make you constructive consumption?
Undoubtedly, Neeraj bhai. But within consumption, as I mentioned, it's not consumer staple.
Not consumer staple. Sorry, you just mentioned that. Okay.
The companies will have to innovate. To many companies, my question is, what you are selling to my parents, you are selling to me. But unless until you launch a new product which will be used by my daughter, your future is likely to be bleak. In consumer staple, innovation will be key. How do you connect with the young consumers, millennials, because they will be your consumer for decades to come. On the consumer discretionary side, there is exciting opportunity. One, post-COVID, the objective of life has changed. More importantly, you are getting money to spend. Put together consumer discretionary over consumer staple, but within consumer staple, look for companies which are innovating.
Yeah, my bad. You kind of briefly answered it. I just wanted that particular thing on staples as well, and lovely to get it. Nilesh bhai, hopefully the red on your t-shirt doesn't rub off on the markets, but you're looking young as ever. So continue doing that, and hopefully we have a very nice next 2 test matches as well. Looking forward to that. Thank you for joining in today.
Undoubtedly.
Thank you for joining in today.